It's Tuesday, the 7th of September 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. One of the country's biggest companies looks to introduce mandating COVID vaccinations as the Federal Treasurer takes a swipe at recalcitrants. That's our main story. Also coming up in today's podcast, job ads fall but still remain relatively high as the labour market maintains its strength. A military coup in Guinea hit some of Australia's big mining companies. And let me tell you about a company that's up 500% this year. Then stay listening for my chat about the outlook for the local media industry. But first, here's a brief look at markets. Wall Street was closed overnight for the Labor Day holiday. European markets were higher, with London's FTSE and the Stoxx Europe 600 up 0.7%. The S&P ASX 200 rose slightly yesterday to finish at 7,529 points, having lost nearly 1% earlier in the day. Technology stocks were among the best performers, while the energy and materials indices were both more than 1% lower. The banks were mostly higher, with the exception of Westpac, which lost ground. Afterpay was up 1.7%, while Xero and Telstra both beat the market. The big iron ore miners lost ground. Fortescue Metals traded ex-dividend, meaning that anyone buying the stock yesterday didn't get the big dividend announced by the mining giant last month. Its share price fell nearly 11%, easily the worst on the bourse. Oil prices were down a touch overnight. The price of gold hit a 2.5-month high yesterday and is trading around $1,823 an ounce. That's helped several of the gold diggers. Evolution was up nearly 4% yesterday, while market leader Newcrest Mining was 2.5% higher. Coal prices continue to surge, with futures trading hitting a new high. Economic recoveries in China and India are spurring demand for electricity, and renewables don't have the capacity to provide the extra output. At the same time, gas prices have hit records as well. The International Energy Agency expects global electricity demand to rise 5% this year and 4% next year. With China banning Australian coal and supplies from Indonesia, Russia and South Africa all hitting constraints, the price of coal has surged. And the Aussie dollar is trading at 74.3 US cents. The Federal Treasurer Josh Frydenberg last night said Australians not getting vaccinated was slowing down the opportunity for the economy to reopen. And the boss of Telstra, one of the country's largest employers, said he was moving towards mandating of vaccinations for his frontline staff. The comments come as Federal Cabinet agrees that borders will reopen once 70 and 80% vaccinations are reached. But that's 70 and 80% of all eligible Australians, not just those in certain states. Mr. Frydenberg didn't give an estimated timing for reopening, but said Australians couldn't live in lockdowns forever. He said it was absolutely on the people who don't get vaccinated if they become more vulnerable to the impact of the virus. His comments come as pressure is ramping up on business to introduce mandatory vaccines. Telstra is getting set to mandate vaccinations for 8,300 frontline staff by the middle of November. Chief Executive Andy Penn said it was critical that staff get a jab given how often technicians work in vulnerable communities or enter the home of customers, and the company would start consulting employees. Telstra's retail workers will be included in the directive. It follows manufacturer SPC and airlines Qantas and Virgin mandating vaccinations. While there's been plenty of noise about the decisions, the boss of SPC, Robert Giles, told Fear and Greed last week that 97% of his staff were happy to have a jab. At least vaccine supply is now less of an issue, according to the rollout czar, General J.J. Fruin. The focus now is on having enough distribution points. The national vaccination rate is above 38%, with 63% of people having had one dose. New South Wales leads the way with 42% of eligible citizens fully vaccinated, and more than 74% have had one jab. But the race isn't about one state achieving the 70 or 80% vaccination rates. It's about all the states doing so. With government pressure now ramping up, vaccines being made available, and desperate businesses looking for a way out of the crisis, many companies are now likely to force staff to get vaccinations, or at least encourage them forcefully. It looks like the best way out of this disaster. In a moment, the rest of the news you need to know this morning. In overseas news, this year is on track to be the best ever for global mergers and acquisitions deals, with $4 trillion worth of deals done so far. There were $500 billion worth of deals done last month, traditionally the quietest month of the year because of the northern summer, according to the Financial Times. Low interest rates, plenty of cash in private equity groups, and more confident boards have triggered the surge. Singapore, one of the most vaccinated countries in the world, is facing a surge in COVID cases and may reintroduce restrictions. It's already increasing the frequency of mandatory testing for high-risk environments such as gyms. Meanwhile, Thailand is set to reopen popular tourist spots in an effort to help its battered economy. Bangkok and a number of beach resorts will open from 1 October. And Marvel's first superhero movie with an Asian lead actor, Shang-Chi and the Legend of Ten Rings, made $90 million in ticket sales in the US over the Labor Day holiday weekend, the best release on record for the 3-day period. It offers hope to movie studios and cinema chains around the world. Locally, the ANZ Job Ad series fell 2.5% during August, but was still more than a quarter above its pre-pandemic level. The fall reflected the lockdowns in New South Wales and Victoria, but the number of ads remains surprisingly high. ANZ economists said it suggested that the jobs market would rebound once economies reopened. The employment market was a shining light of the economic recovery earlier in the year, with the unemployment rate falling to 4.6% in July, ahead of the lockdowns. That's expected to rise again, though the ANZ data suggests there's still strength in the labour market. The Reserve Bank Board meets today, and while interest rates won't change, financial markets will be watching to see if it decides to start tapering its bond purchases. A unit of Guinea's military has seized power and suspended the constitution, putting in jeopardy investments made by Australian companies Rio Tinto, Alcoa and Alumina Limited in the West African nation. All companies have bauxite interests in the country, and Rio has been undertaking early work at 2 iron ore leases in Simandou. Guinea has an abundance of natural resources, including around 1/4 of the world's bauxite reserves, which is used in many building materials. Guinea also has large reserves of diamonds, gold and alumina, and is trying to become a major player in the iron ore market. I mentioned Telstra's Andy Penn earlier in the show. Mr. Penn made a surprise visit to Papua New Guinea about buying the telco Digicel based in PNG. This is the one that the Australian government asked Telstra to have a look at as it tried to prevent the asset falling into Chinese hands. Mr. Penn met with the country's Prime Minister, James Marape. Digicel is the largest owner and operator of 3G and 4G mobile networks in PNG, Fiji, Tonga, Vanuatu, Samoa and Nauru. New South Wales Premier Gladys Berejiklian expects the number of COVID cases in her state to peak at around 2,000 per day sometime next week, despite the state recording 200 fewer cases yesterday. 1,281 cases were announced yesterday and 5 deaths, taking the toll to 131. The state released modelling that shows between 2,200 and 3,900 people will require hospitalisation in October and November. Meanwhile, Ms Berejiklian's deputy, State Nationals leader John Barilaro, broke ranks, saying the imposition of curfews across Western and Southwestern Sydney hadn't worked. Victoria recorded 246 cases yesterday, with 80% under the age of 50. Transmission is mostly coming from households and essential work settings. Authorities said compliance was waning amid lockdown fatigue. The Business Council of Australia has called for paid domestic violence leave to become a universal employment right. Without it, women will find it harder to fully participate in the labour market. The call came on the first day of the National Summit on Women's Safety. The Prime Minister was also speaking and was critical of how the court systems deal with sexual assault victims. Chief of Defence Force Angus Campbell said he'd been surprised by the speed of the Afghanistan government's collapse, and it was made easier by President Ashraf Ghani fleeing into exile. But Australia's airlift of more than 4,000 people out of Kabul had far exceeded expectations. General Campbell said despite years of training by US and Western allies, morale was low and corruption high in the Afghan army. The comments came as the Taliban said it had taken control of the last stronghold of resistance fighters in the country. BGH Capital withdrew its bid to acquire Hansen for $6.50 a share yesterday, and as a result, the software group's share price tumbled more than 9%. Ever heard of Satire? Must admit, I hadn't. The luxury fashion marketplace's share price has gone on a run and is up more than 500% this year after listing back in December. Satire, that's Cettire, is now the same size as Kogan.com, which I've spoken about plenty of times. Setai sells Gucci, Burberry, Fendi and Dolce & Gabbana, has 115,000 active customers, and for the last financial year had revenue of $125 million. No idea how a man of my elegance, standing here this morning wearing a Fear and Greed t-shirt, missed this online shopping bonanza. The Chinese-developed COVID vaccination, Sinovac, may eventually be among the most critical of the different jabs when it comes to the reopening of the Australian economy. Why? Because millions of Chinese, many of them potentially tourists and students to Australia, have been inoculated using the vaccine. So, education and tourism providers are hoping the federal government recognises the vaccine to help open up movement between the two countries. Tourism and Transport Forum boss Margie Osmond told a parliamentary committee yesterday that recognising Sinovac would be a big boost for her industry when it reopens. In 2019, 1.3 million Chinese tourists came to Australia, easily the largest source of visitors. The second biggest IPO of the year jumped 15% on listing yesterday. Home Consortium's Healthcare and Wellness Real Estate Investment Trust includes 27 medical hubs, private hospitals, childcare centres, aged care and government facilities. The Victorian opposition leader Michael O'Brien has called for a party meeting this morning ahead of an expected spill of his leadership. 3 MPs, including former leader Matthew Guy, quit the front bench yesterday. Mr O'Brien has already warded off a leadership threat earlier in the year. And a landmark for the past 15 years, the Melbourne Star giant Ferris wheel will close, with its owners put into liquidation, a casualty of the COVID crisis. Up next is a daily interview, and I'm joined today by one of the sharpest media commentators around. Tim Burrows is the founder of Mumbrella and has now launched a new media and marketing industry newsletter called Unmade. He's joining me today for a look at the media sector, the results from companies like Nine, Seven, oMedia, and even the online real estate players Domain and REA. There's likely to be a bit of consolidation in the industry in the near future, and Tim takes me through some of the possible changes and what they mean for the media landscape and for consumers. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. It's Tuesday, the 7th of September 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.